A very good afternoon to you and welcome to Souqnews World News. I'm reaching you live from the commercial city of Lagos. I'm Oyin Krumale. Let's begin with today's top stories. The federal government has announced plans to roll out a nationwide Buy Nigeria First campaign targeting 3 trillion naira. And Nigerian Immigration Service announces a 100% sharp increase in the cost of international passports effective from September 1st, 2025. Aliko Dangote signs a multi-billion-dollar agreement with the Ethiopian government to construct a $2.5 billion fertilizer plant. India is set to boost its Russian oil imports by 20% in September, despite U.S.'s tariffs aimed at punishing New Delhi. And in the world of sports, Manchester United suffered a shocking Carabao Cup exit at Grimsby Town in a rain-soaked thriller at Blundbird Park. Welcome back. Many thanks for joining us on the World News. Now, the federal government has announced plans to roll out a nationwide Buy Nigeria First campaign in the coming months with the goal of generating about 3 trillion naira for the economy in the short term. The Minister of State for Industry, Trade and Investment, Senator John Owan-Eno, disclosed this on Monday in Lagos during a pre-summit briefing ahead of the West African Industrialization, Manufacturing and Trade Summit and Exit 2025 Summit. The theme, Accelerating West Africa's Sustainable Industrial Revolution for Economic Prosperity, will focus on industrial policy, manufacturing, competitiveness, regional trade, infrastructural access to finance, and technology-driven growth. Eno explained that the campaign seeks to reduce Nigeria's over-reliance on imported goods, stimulate local production, and strengthen economic resilience. He added that if successful, the initiative could deliver as much as 3 trillion naira value to the economy while supporting job creation and industrial growth. Still, the federal government has reaffirmed its commitment to boosting crude oil production through supportive policies, incentives, and strategic partnerships with the international oil companies. The Minister of State for Petroleum Resources, Senator Heineken Lokbobri, gave the assurance in the Federal Capital Territory during a courtesy visit by Mr. Nicholas Terraz, President, Exploration and Production at Total Energies. Lokbobri stressed that the administration is determined to provide a stable operating environment to attract investment and enhance production output, noting that Nigeria's oil industry remains central to driving economic growth and foreign exchange earnings. In his remarks, Terraz briefed the Minister of Total Energies' ongoing and planned operations in the country. He confirmed the successful drilling of additional wells and emphasized the campaign's contribution to maintaining production stability. Terraz also disclosed the firm's divestment of its stake in the Bonga North project to Shell, while reiterating Total Energies' long-term commitment to Nigeria's energy sector. The Nigerian National Petroleum Company Limited has announced that Petrobras, Brazil's state-owned oil company, is exploring fresh investment opportunities in Nigeria's upstream sector with a strong focus on deep water and ultra-deep water projects. In a statement shared on X on Wednesday, NNPCL disclosed that its executive vice president for upstream, Udi Ntia, held talks with Petrobras Chief Executive Officer, Magda Chambriard. The meeting took place on the sidelines of President Bola Tinubu's state visit to Brazil. The discussions centered on strengthening partnership and expanding Petrobras's presence in Nigeria's oil and gas industry, which is seeking new divestments and investments to boosting production and harness untapped reserves. Industry observers note that Petrobras's interest reflects renewed global confidence in Nigeria's upstream potential, particularly in offshore exploration, where vast resources remain underdeveloped. The engagement is expected to open the door for strategic collaboration between both companies, potentially unlocking new capital inflows and boosting Nigeria's energy output. Still, the federal government has secured $40 million funding from Japan International Cooperation Agency, JICA, for the establishment of a digital innovation hub in the Federal Capital Territory. In addition, the government will commit $20 million through the Nigerian Sovereign Wealth Investment Fund to support the project, according to the Director General of the National Information Technology Development Agency, NIDA, Malam Kashifu Inuwa, who disclosed this in Abuja on Monday. Inuwa said the initiative would position Nigeria to harness the opportunities of the fourth industrial revolution by driving technological innovation and digital inventions. He noted that the hub will serve as a platform for startups, entrepreneurs, and innovators to build scalable solutions, create jobs, and accelerate the country's digital economy agenda. The Director General of NIDA said, quote, "This investment will help Nigeria leverage technology to transform the economy and compete globally," end quote. The Nigerian Immigration Service, NIS, has announced a sharp increase in the cost of obtaining Nigerian international passports effective September 1st, 2025. According to the revised fees structure, a 32-page passport with 5-year validity, previously priced at 50,000 naira, will now cost 100,000 naira. Similarly, the 64-page passport with 10-year validity, which currently costs 100,000 naira, has been doubled to 200,000 naira. The service said the adjustment was necessary to cover rising production costs and to improve service delivery across the passport offices nationwide. However, the announcement has already sparked mixed reactions among young Nigerians, many of whom have raised concerns over affordability and timing, given the country's economic challenges. Industry analysts said the hike could discourage applications and increase pressure on Nigerians seeking passport to travel for studies and businesses abroad. The NIS maintains that the new pricing will ensure sustainability, efficiency, and the continued rollout of enhanced e-passport services across the country. The Manufacturers Association of Nigeria, MAN, has warned that Nigeria Customs Service reintroduced 4% free on-board charge on imports will worsen inflation, raise raw materials costs above the 6.6 trillion naira recorded in 2024, and further burden struggling manufacturers. In a statement, the MAN's Director General Segun Ajayi Kadir dismissed the NCS's claim that the levy, which replaced the 1% comprehensive import supervision scheme and the 7% cost of collection, would reduce the cost. He argued that the new charge imposes a heavier burden than the previous system, particularly on high-value imports such as raw materials and machinery. Ajayi Kadir stressed that the costs would be passed to consumers, fueling inflation already at 21.88% as of July 2025. He noted that the peer economies like Ghana and Senegal kept such levels within 0.5 to 1%, targeting higher rates only for luxury goods. He urged the government to suspend the levy and retain the former system until December 31st, 2025 to allow impact assessment and proper stakeholder engagement. You're still watching the world news on Souqnews Television. We're going to break. We'll be back in a moment to stay with us. Have both e-passport and the normal big one. ESCOM, I think it.
Elon Musk is a visionary entrepreneur leading innovative ventures in technology, space exploration, electric vehicles, and renewable energy. Musk was born on June 28, 1971 to a South African engineer and his mother, a Canadian model and nutritionist in Pretoria, South Africa. talents for computers and entrepreneurship emerged early, and at age 12, he created and sold a video game. Musk studied physics and economics at Queen's University and the University of Pennsylvania. In 1995, Musk founded Zip2, sold to Compaq for $307 million. He also co-founded X.com, which became PayPal, acquired by eBay for $1.5 million in 2002. Driven by a vision for humanity's multiplanetary future, Musk founded SpaceX in 2002, developing affordable rockets to support International Space Station mission and NASA's Artemis program. He became a major investor in Tesla 2004, launching electric vehicles like Roadster, Model X, and Model 3. Tesla unveiled the Cybertruck, beginning deliveries in 2023. Musk acquired X, formerly known as Twitter, in 2022, aiming to enhance future and transparency. Musk has at least 12 children from multiple relationships, including Justin Wilson, Tallulah Riley, Grimes, and Siobhan Zilis. Through SpaceX, Tesla, and other ventures, Musk shapes technology and innovation globally, and his influence extends beyond business into politics and culture.
Lesotho, a country like no other on the African continent, and in fact, like no other in the world. Nestled entirely within the borders of South Africa, Lesotho holds a unique geographical distinction. It is the only independent nation on Earth located entirely above 1,000 meters in elevation. Its lowest point, at 1,400 meters above sea level, is higher than the highest points in countries like Netherlands, Denmark, or even the United Kingdom. This extraordinary altitude earns Lesotho its nickname, the Kingdom in the Sky. Lesotho is one of just 3 countries in the world that are completely surrounded by one other country, the others being San Marino and Vatican City in Italy. But unlike them, Lesotho is not a microstate. It boasts a proud population, a strong cultural identity, and a landscape marked by rugged mountains, deep valleys, and fast-flowing rivers. What also makes Lesotho stand out in Africa is its climate. While much of the continent is known for its warmth, Lesotho regularly experiences snowfall, especially in its highland regions. In fact, it is home to Afriski, Africa's only ski resort south of the equator, drawing tourists who seek winter sports in an unlikely location. But Lesotho's uniqueness goes beyond geography and weather. The Basotho people are known for their iconic wool blankets, worn with pride across the country. These are not just for warmth, they are deeply symbolic, representing milestones, rites of passage, royalty, and social status. No traditional ceremony is complete without the presence of these beautifully patterned and color-coded blankets. The traditional Basotho hat, or mokorotlo, is another national symbol, so important that it appears on the country's license plates and currency. Lesotho also harnesses the power of its water. Its Lesotho Highlands Water Project exports fresh mountain water to South Africa while generating electricity for domestic use. Water, often called white gold, is one of the country's most valuable resources. In many ways, Lesotho defies expectations. It is a country of heights, both literal and cultural. In a continent known for deserts and plains, Lesotho offers snow and slopes. In a region often shaped by lowland agriculture, Lesotho rises up proud, elevated, and unshaken. Lesotho is not just unique to Africa, it is unique to the world. This is the uniqueness of Africa, and today we spotlight Lesotho, the Kingdom in the Sky. I'm Moyosore Adebi for Souqnews TV.
welcome, Mark. If you just joined us, it's the World News reaching you live from our studios at Souqnews Television. Now, Africa's richest man, Aliko Dangote, has signed a multi-billion-dollar agreement with the Ethiopian government to construct a $2.5 billion fertilizer plant. The deal, signed on Thursday in Addis Ababa, gives Dangote 60% ownership of the project, while the remaining 40% will be held by the state-owned Ethiopian Investment Holdings. The facility will be sited in Ethiopia's eastern Somali region and is projected to produce 3 million tons of fertilizer annually once completed. Construction is expected to take about 40 months. To ensure steady operations, the plant will be connected by pipeline to the Kalub and Hilala natural gas fields in the southeast of the country. The EIH said the project will drastically reduce Ethiopia's reliance on imported fertilizer, easing foreign exchange pressures while strengthening the country's food security. The agreement marks another major step in Dangote's continental expansion, adding to his vast portfolio in cement, oil refining, and agribusiness. Now, South Africa has approved higher electricity tariffs after Eskom Holdings secured a major settlement with the National Energy Regulator of South Africa. The agreement also allows the state-owned utility to implement an 8.76% tariff increase beginning April 2026, above the initially approved 5.3%. The settlement, valued at 54 billion rand, is aimed at stabilizing the company's finance as it continues to battle debt and operational challenges. The regulator's decision followed Eskom's legal challenge against an earlier ruling, marking a rare victory for the utility, which has long struggled under mounting pressure from declining demand and customer dissatisfaction. The outcome is expected to provide temporary relief to Eskom's strained balance sheet, but analysts warn that the increase could further burden households and businesses already grappling with the rising costs. Industry observers believe the tariff adjustment highlights the broader struggle of balancing financial sustainability with affordability in South Africa's power sector. The move signals government's intent to strengthen Eskom's revenue base while encouraging reforms in the country's electricity market. However, the higher costs risk reducing public support at a time when confidence in the power sector remains fragile. Now, Rwanda has officially received its first group of migrants deported from the United States, marking the beginning of a controversial relocation agreement between the two governments. According to Rwandan officials, 7 vetted migrants arrived in Kigali in mid-August under the arrangement that was initiated by President Donald Trump's administration. The federal deal requires Rwanda to host individuals who are deported from the United States, with both governments maintaining that the migrants will be provided safety, housing, and integration support. Authorities in Kigali emphasized that the agreement is part of Rwanda's broader commitment to global cooperation on migration issues, despite international criticism of the policy. Human rights groups have raised concern over the arrangement, questioning the long-term welfare and freedoms of those relocated. However, Rwanda has stated that it remains prepared to manage the process, and the responsibility, while Washington views the agreement as a key step in strengthening its broader control and immigration enforcement strategies. Now we're off to Zambia, where the inflation rate has slowed to its lowest level in almost 2 years, supported by the strengthening of the national currency. Official data shows that annual consumer price growth eased to 12.6% in August, compared with 13% recorded in July, reflecting the impact of reduced import costs. The kwacha has gained nearly 19% against the United States dollar this year, helping to offset rising global prices and stabilize domestic markets. This appreciation has been credited to stronger foreign exchange inflows and improved investor confidence, which have reduced pressure on food and fuel prices. Authorities in Lusaka view the development as a sign of progress in restoring economic stability. However, they note that maintaining the trend will depend or depend rather on sustaining currency strength, ensuring stable supply chains, and reinforcing fiscal measures aimed at protecting households' purchasing power. Now, Southeast Asian nations are deepening trade agreements with the United States that will significantly increase imports of American wheat, corn, soybeans, and animal feed, reshaping global agricultural trade. Indonesia and Bangladesh have already committed to large annual purchases of U.S. wheat as part of broader tariff-cutting deals, while Vietnam, Thailand, and the Philippines are expected to follow with expanded grain and soy meal imports. These agreements come as U.S. prices remain more competitive than shipment from rivals in Australia, Canada, and the Black Sea region. Indonesia recently signed a memorandum of understanding to import 1 million tons of U.S. wheat annually, while Bangladesh pledged to purchase 700,000 tons each year to strengthen bilateral ties. Vietnam, one of the fastest growing feed markets, is preparing to sign deals worth $2 billion in U.S. farm produce, including corn and soy meal, at the same time. Thailand and the Philippines are exploring large purchases of American corn and soybeans, with discussions ongoing over tariff adjustments that could accelerate imports. The shift marks a comeback for U.S. exporters who had lost market share in Asia to Argentina, Russia, and Ukraine over the past decade. With lower freight costs and attractive pricing, American farm products are regaining ground in the region. Analysts note that Asia, which accounts for 30% of global wheat, corn, and soy meal demand, will play a decisive role in shaping trade flows as its population and food consumption continues to expand. Now, the Bank of Korea on Thursday kept its benchmark interest rate steady at 2.5%, while slightly raising its economic growth forecast as Asia's fourth largest economy grapples with high housing prices and external risks from U.S. President Donald Trump's tariff war. South Korea's economy performed better than expected in the second quarter, driven by surging semiconductor exports, which recorded their strongest growth in nearly 5 years. Despite the improved outlook, the central bank cautioned that challenges remain, and the Bank of Korea said in its statement that while the inflation remains on a stable path, uncertainty over the growth outlook is still high. Analysts note that while robust chip demand is bolstering the growth, persistent concerns over global trade tensions and domestic real estate pressures mean policymakers are treading carefully. The rate decision signals Seoul's attempt to balance domestic stability with external headwinds, leaving room for flexibility should global conditions worsen. Now, UK vehicle exports to the United States picked up pace in July, reversing months of decline after London and Washington agreed on tariff reduction for the auto sector. According to the Society of Motor Manufacturers and Traders, the shipment rose by 6.8% to nearly 10,000 units in July. This marks the first rebound after 3 consecutive months of sharp falls, including a steep 55.4% year-on-year plunge in May. The trade relief, a part of efforts to smoothen bilateral economic ties post-Brexit, has given UK automakers a much-needed boost in their second-largest export market. The US remains a key buyer of British-made vehicles, regaining from the luxury cars to electric models industry. Stakeholders welcome the rebound, but one that sustained growth would depend on stable policies, competitive production costs, and further market access deals. With the July figures offering cautious optimism, automakers are looking to consolidate gains and strengthen transatlantic trade momentum in the coming months. We're going to break and we're back in a moment, to stay with us.
In Africa, if there's one man who has consistently been a household name and index of reference in the business arena, the name Aliko Dangote apparently stands tall. The Africa's richest man clearly benchmarks success, wealth, and prosperity. His official love and passion for business are quite phenomenal. These can be traced to his background. Born in April 10, 1957 to Maria Sanusi Dangote and Mohammed Dangote, his maternal ancestors were prosperous caravan traders under British colonial rule, and his grandfather, Alhaji Sanusi Dangote, was a commodity trader. Dangote's grandfather was heavily involved in his upbringing and helped ignite his entrepreneurial spirit. For Dangote, one would ever assume his wealth was handed out or easily channeled, being an offspring of Dangote, or his success didn't come through daydreaming. Dangote complemented inherited fortune with deliberate hard work and innovation to pave his way to the top. Those who knew Dangote while growing up will not be surprised at his outstanding success. At age 8, Dangote uses pocket money to buy sweets, which he and others sell for a profit. Everything big in life starts from little. Taking a clue from this, Dangote, from a seed loan of 500,000 obtained from his uncle, started business, which he traded commodities and business supplies, primarily cement. By 1981, his firm was successful that he had incorporated other businesses and established the Dangote Group. His empire extended to foodstuffs, including sugar, salt, wheat, cement, haulage, and other business concerns. Among his holdings were Dangote Industries, Dangote Bale Nigeria, Dangote Cement PLC, Benue Cement Company PLC, Dangote Sugar Refinery PLC, Dangote Flour Mills, and Nascent Ally Industries PLC. In addition to his holdings in Nigeria, the Dangote Group has operations in several other African countries. With these giant strides in the business arena, Dangote will forever be grateful to his grandfather for giving him wings to fly. According to Forbes, an American business magazine, Dangote remains the richest man in Africa with an estimated fortune of $13.9 billion. Dangote is one Nigeria, highly decorated with honors as well. His urine service and huge investment also got him both local and international recognitions. Like the Guardian Man of the Year in 2015, he won the 2016 African Business Leader Award organized by the African American Institute. Dangote was cited as one of the top most influential Africans by the New African magazine in 2015, 2017, 2018, and 2019. He was recently conferred with the prestigious award of the National Order of the Lion by the President of Senegal. When it comes to breaking jinx, Dangote has it in full measures. He took his pioneering and jinx-breaking adventure to another dimension with the unveiling of the $20 billion refinery, widely adjudged as the largest single-train petrochemical refinery in the world. The refinery has the total capacity of 650,000 barrels of crude oil per day and is expected to earn as much as $21 billion in annual income. Situated on 2,500 hectares site at the Lekki Free Trade Zone, Lagos, it is supplied with crude oil by the largest subsea pipeline infrastructure in the world. When fully in operation, the refinery will provide 135,000 permanent jobs in the region. When it comes to family life, Dangote seems to, however, prefer maintaining a low profile. He got married to Zainab in 1977 but divorced at an unknown date. He was later married to Maria Mohammed Rufai. Dangote has 3 daughters named Halima, Maria, Fatima, and he also adopted a son named Abdurrahman. Dangote is one grounded authority that combines rare intelligence with self-effacing demeanor, a persona that naturally makes kindness. Like an eagle, Dangote's foresight and unusual business acumen make him a rare to come by. Though he owns chains of business in Nigeria and across Africa, the quest by this uncommon risk taker to conquer more business territories may not wane anytime soon.
Welcome back. Many thanks for joining us on the news. Now, United States President Donald Trump's decision to double tariffs on Indian imports to as high as 50% has shaken trade ties between both nations. The punitive move, triggered by India's continued purchase of Russian oil, targets key sectors including garments, jewelry, footwear, chemicals, and sporting goods. Exporters warn of the widespread job losses, with nearly 2 million jobs and positions at risk, especially in Prime Minister Narendra Modi's home state of Gujarat. Talks between Washington, D.C. and New Delhi collapsed after 5 failed rounds, leaving no agreement to reduce tariff rates. India's government has expressed hope for a review while considering relief measures to shield small exporters. Analysts warn that the disruption could weaken India's competitive edge against rivals like Vietnam and Bangladesh, while the rupee continues to depreciate. The compounding market pressures. Despite the setback, economists believe that the crisis could push India toward deeper reforms and reduce protectionism by boosting trade openness and strengthening its manufacturing base. India may not only cushion the tariff shock, but also reinforce its long-term appeal as a global production hub. The standoff, however, underscores the fragility of a partnership once seen as central to countering China's rise in Asia. Still on India, the country is set to boost its Russian oil imports by as much as 20% in September, despite new U.S. tariffs aimed at punishing New Delhi for relying heavily on Moscow's crude. Trading sources said Indian refiners, including Reliance and Nigerian Energy, are taking advantage of wider discounts as Russia seeks to offload surplus supplied caused by Ukrainian attacks on its refineries. With refinery outages cutting domestic processing, Russian exporters are pushing more barrels onto the global market at reduced prices. In August, India imported around 1.5 million barrels per day of Russian crude, representing 40% of its oil needs and making it the world's largest buyer of seaborne Russian oil. Discounts on the world's crude for September has widened to about $3 per barrel below Brent, compared to narrower levels in August, giving India refiners fresh incentive to expand purchases. Analysts warn that without India's continued demand, Russia would struggle to sustain export revenues that help finance its war in Ukraine. The U.S. has sharply criticized India for profiteering from Moscow's discounted barrels, raising tariffs on Indian imports to 50% this week. Prime Minister Narendra Modi has defended the purchases while deepening diplomatic engagement with Putin. Experts said that unless a global ban is imposed, India is unlikely to halt a Russian crude import, as doing so could disrupt global supply and trigger a sharp price surge toward $100 a barrel. Now, Britain's poorest households are facing a sharper financial squeeze as official data reveals that rising grocery prices and highly payroll taxes have pushed their living standard and costs up more quickly than those of wealthier citizens. According to the Office for National Statistics, the lowest earning households saw costs increase by 4.1% in the year through June, compared with 3.8% for those in the highest income bracket. The inflation gap highlights the burden on tenants and low-income families who spend a larger share of their earnings on food and essentials. Recent increases in the minimum wage and payroll taxes introduced in April have contributed to higher business costs that are being passed on to consumers through elevated supermarket prices and household bills. The figures pose a major challenge for the Labour government, which has pledged to raise living standards and ease the pressure on struggling families. Economists warn that without targeted support measures, the widening cost disparity could deepen quality and weaken households' demand, putting additional strain on the broader United Kingdom economy. Now, global airlines are urging the United Nations aviation body to raise the maximum age for commercial pilots from 65 to 67, arguing that booming demand for air travel is outpacing the supply of qualified aviators. The International Civil Aviation Organization is set to debate the proposal at its General Assembly on September 23rd, according to Reuters. If approved, the change would allow pilots to fly internationally for 2 additional years, potentially easing staffing challenges for carriers worldwide. Currently, international regulations bar pilots over 65 from operating cross-border flights, with many countries, including the United States, enforcing the same limit domestically. The proposal has faced resistance from major U.S. pilot unions, which warns that raising the limit could compromise safety standards and block opportunities for younger pilots entering the industry. With travel demand surging post-pandemic, the outcome of the ICAO's decision could reshape the dynamics of global aviation workforce. In the world of sports, the 2025-2026 UEFA Champions League phase is officially complete after Benfica, Club Brugge, Karabakh and Copenhagen secured the final 4 spots in Wednesday's playoff, a second leg. Their qualification finalizes the expanded 36-team format, with the draw scheduled for Thursday, which is today, at 18:00 CET in Monaco. History was made on Tuesday night when Kirat Almaty stunned Celtic, advancing to the group stage for the first time after a dramatic 3-2 penalty shootout win in Kazakhstan. Norway's Bodo Glimt also sealed their place, progressing 6-2 on aggregate despite a 2-1 loss to Sturm Graz. Thanks to last week's commanding 5-0 victory at home, the revamped league phase will see all 36 teams placed in a single table, each playing 8 matches against different opponents to determine the top 24 sides advancing to the knockout stages. This season promises fierce competition, with debutants like Kirat adding fresh excitement to Europe's Premier Club tournament, according to reports. Now, Manchester United suffered a shocking Carabao Cup exit at the hands of League Two side Grimsby Town in a rain-soaked thriller at Blundell Park on Wednesday night. The Red Devils were beaten 12-11 on penalties after a pulsating 2-2 draw. Charles Varnam fired the Mariners ahead before former United Academy player Terrell Warren doubled the lead, sending the home crowd into raptures. United fought back in the second half, with Brian Mbeumo and Harry Maguire dragging them level to force the shootout. What followed was a nerve-shredding marathon of sport kicks, ending when Mbeumo struck the crossbar with a second attempt, sealing a famous night in Grimsby's history. For the Mariners, it was victory for the ages. For Eric Ten Hag's side, a humbling seminar that no game is guaranteed. Many thanks for watching. Now do well to follow us on all our social media platforms at Souqnews TV. I'm Oyin Priye Krumale. Good afternoon to you.